Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
Bitcoin Dominance hits a 7-month high as another ETF proposal gets declined by the SEC. Disagreement inside the SEC as one member gets publicly vocal about the ETF denial. Tonight we get an exclusive interview with SEC Commissioner Hester Peirce. Our panel of experts discusses the likelihood of an ETF before the end of 2018. Salt Lending receives an offer from Rival Nexo. Tonight we talk to both Salt Lending and Nexo. We take another look at transaction mining, the new trend that's making investors millions. Willie Woo tells us why he thinks the worst is yet to come. And we speak to the Arbitrage fund manager who started off with $10,000 from his college dorm and is today managing $60 million. Good evening, this special edition of Crypto Trader starts right now. Bitcoin is holding firm even after the SEC declined another ETF proposal that was submitted by the Winklevoss brothers. Amongst the reasons cited for this latest decline was that the SEC felt that the latest proposal by the Winklevoss brothers, quote, didn't demonstrate that the exchange would be able to prevent fraudulent and manipulative acts. The SEC went further to say that the Commission believes that in order to meet their standard, an exchange that lists and trades an ETF must, in addition to the other requirements, satisfy two additional requirements. First, the exchange must have surveillance sharing agreements with the significant markets for the underlying assets. And second, those markets must be regulated. Of course, the Winklevoss brothers immediately appealed the decision as this was their third time submitting an ETF. It seems though that the ruling by the SEC was all but unanimous, with one of the commissioners from the SEC coming out in a public dissent against the Commission's ruling. Hester Peirce published a dissent where she cited that the SEC had, quote, overstepped its limited role when looking at the underlying asset and not the ETF itself. And she said that if the same were applied to other commodities such as gold and oil, they would never pass the test. According to Peirce, the ambit of the SEC should be in ensuring that the instrument itself should be protected against manipulation, and that the SEC has no scope to look at the underlying asset, which she believes they did in this case. Now, if this is indeed applied, it gives investors renewed hope that the next ETF decision, which is the Van Eck ETF due on the 10th of August, may actually be approved by the SEC. Joining me today, I've got a panel of experts to discuss the likelihood of us getting an ETF before the end of 2018. I've got Arthur Hayes, CEO and founder of BitMEX, all the way from Hong Kong. I've got Matti Greenspan, senior analyst at eToro from Tel Aviv. Michael Sonnenschein, managing director of Grayscale Investments from New York. And I've got Mark Brady, an ex-ETF builder from Blackpool, the biggest ETF builders in the world. Gentlemen, good evening. Thank you for coming on the show. Let's get right to it. Michael, I'm going to start with you. The big question is, do you think that we'll see a Bitcoin ETF before the end of 2018?
So it's really hard to say. I think that there are still quite a few concerns that the SEC has. If you look at the recent letter they published when they denied the Winklevoss ETF, they're still looking at a lot of factors within the underlying market, including surveillance, regulation, and to the best of my knowledge, many of those things haven't changed just yet.
So Michael, you don't believe that this is a function of the ETF itself, but as Hester Peirce said, you believe this may be a function of the underlying.
Correct. I think that the Commission, if you look closely at the statements they've made, they're really looking at the underlying market to determine whether or not it's appropriate for a Bitcoin ETF.
Michael, if we look at the comments and particularly at the dissent published by Hester Peirce, she says that the SEC doesn't have the jurisdiction to look at the underlying asset, and that if they did this with either gold or oil, they wouldn't pass the test. Do you think that she has some valid points?
I think that Commissioner Peirce definitely brings up some valid points. The letter that she wrote, I think, addresses a lot of concerns that could also be pointed out in other industries, whether it is oil or pharmaceuticals or any other industry. because there is lack there of surveillance sharing agreements and certain types of arrangements between the commission as a regulator and the industry itself that would maybe invalidate some existing products that are available to Main Street investors. So it's interesting to see that there's a little bit of a divide there at the commission, but nonetheless, I still think we have to wait and see how things play out over the next couple of months.
How important is the Bitcoin ETF for the ecosystem?
So I think it's actually not as important as people make it seem. I'm exceedingly encouraged by what our business is experiencing, and the same is true of a lot of other digital currency firms, be them in the asset management space or an exchange. When I look at the Grayscale investments business, we've been around now since 2013, and we've been offering investors the ability to get exposure to digital currencies through the purchase of a security. And we published a report about a week and a half ago, and we outlined that during the first 6 months of 2018, we actually raised $250 million in new assets, and about 56% of those assets are coming from institutional investors. And so from our perspective, we're actually seeing institutional inflows into the space, despite the fact that there isn't an ETF.
Michael, what's the difference between what you do at Grayscale and an ETF?
So what we do at Grayscale is offer investors a security. So if you don't want to buy and hold and safekeep digital currency directly, but you're interested in gaining exposure to digital currency through the form of a security, much the same way people might buy the Spider Gold product, GLD, instead of holding physical gold, we're actually providing almost an identical service to investors. Now, the difference is that with an ETF, it would be trading on a national exchange, and it would have constant creations and redemptions that would keep the fund in line with its net asset value. And so today, we operate a family of 8 unique investment products. We have a product for Bitcoin Cash, Ethereum, Ethereum Classic, Litecoin, XRP, and Zcash. And then we also have a diversified fund called the Digital Large Cap Fund. And so in many ways, our products look and feel like ETFs because they are a securitized version of digital currency, but they are in fact not ETFs because they don't trade on national exchanges and they're not registered with the SEC.
Michael, I guess the big question is, what do you think an ETF does for the Bitcoin price?
Well, so I have a difficult time making price predictions because I think, first of all, my lawyers would have a field day with it. But second of all, I think that the introduction of an ETF creates an entirely new use case for Bitcoin. Today, Bitcoins are being used for speculation. People are buying and holding them and thinking that the value will go up over time. Companies are using Bitcoin to move money seamlessly around the world. People are using Bitcoin to tokenize different digital assets to keep track of transfer of ownership. But when you start taking digital currency like Bitcoin and putting it inside a financial product, well, you're actually now creating an entirely new use case for Bitcoin that doesn't exist at the moment. And so it's difficult to say how that would affect the price. But if I had to guess, it would probably be accretive to the Bitcoin price because you're taking an asset that's finite in supply and moving it into a place that's kind of locking it up and taking it out of circulation.
Arthur, I'm looking at you next. You guys at BitMEX thrive on volatility. You must be having a great time now.
Absolutely. We're having a great 2018. We're up probably 4 to 5x over what we did in the total of 2017 already.
Arthur, do you think a Bitcoin ETF is likely before the end of 2018?
So I actually took a look at the SEC website, and there are 2 ETFs that have decision dates in Q3 in September, and 2 that have decision dates in Q1 February of next year. So I'd say there's probably a 50-50 chance that we see some decision in Q3 again. And then again, we have another 2 ETFs looking for approval in February of next year.
Arthur, specifically talking about the Van Eck ETF, that's the one that's being reviewed now by the SEC and the one that everyone's talking about. Do you think that the SEC will approve that one?
I don't know. I mean, I think at the end of the day, the SEC wants to keep people interested in the financial markets. And if retail traders continue to ask for these particular products, at some point, they're going to have to approve one of them. They have a gold ETF. Gold is an unregulated market. Then global investment banks have been accused of rigging the markets, yet they allow that ETF to hold billions of dollars of retail money. So how can they not allow a Bitcoin ETF?
Do you think that the decision not to allow the Winklevoss ETF has any impact on the approval of the next ETF?
I think at the end of the day, the Winklevi have done the pre-work, and other issuers are going to benefit for all of the long, hard work that they've done over the past few years.
But Arthur, do you not think that the same reasons they cited for the decline of this ETF, and in particular, they spoke about the risk of price manipulation in the underlying Bitcoin market, do you not think that the SEC is saying to us that Bitcoin is not ready for an ETF?
I don't think so, because at the end of the day, I don't think they've shown any empirical evidence of what they mean by manipulation. Manipulation happens in the gold markets, in the oil markets, in the interest rate markets, in the actual equities that are underlying many of the products that they have listed on their exchanges already that they regulate. So I think that that excuse can go away quite quickly if they change their mind.
Now, Arthur, we both saw Commissioner Hester Peirce coming out strongly against the decision by the SEC to decline the ETF, so much so that she publicly published a dissent. Do you think there's something bigger at play here?
I think that at the end of the day, the U.S. governmental agencies are trying to come up with a coherent view around Bitcoin. You have the CFTC, which regulates two futures products. So can the SEC turn around and say that Bitcoin is not suitable as a product when you have the two of the largest exchanges in the world offering leveraged trading on Bitcoin? I don't think so.
How important is an ETF for the ecosystem as a whole?
It's very important to get more retail money into the system, because at the end of the day, retail traders don't want to have to worry about securing a Bitcoin wallet. Where do they buy it from? Using the different exchanges. So if all they have to do is click on their E-Trade, Scottrade, Interactive Brokers, their 401k, they can buy an ETF which gives them exposure to Bitcoin, but not allow them to actually experience the risks of holding it. That's a very powerful way for them to get involved.
Arthur, a few weeks ago you were on CNBC Fast Money and you said that we were one ETF decision away from $50,000. Do you still maintain that if we get a positive ETF decision, we can go over $50,000?
Absolutely, because once the U.S. allows a retail ETF and investment product, jurisdictions around the world will offer Me Too products, because at the end of the day, everyone wants that AUM in their system, and people will compete for that.
Arthur, can you short an ETF? I think what I'm asking you is, do you think that an ETF can have the same effect as a future had, where people can short it and it can take the price down?
I don't think it's a risk. A healthy market requires people to go long and go short. And with an ETF, you can borrow the shares and short them on the market. There will also be derivatives offered on top of the ETF on exchanges like the CME and CBOE. So it actually creates a healthy ecosystem for people to express bullish and bearish views.
Arthur, in one word, are we getting a Bitcoin ETF before the end of 2018?
Yes.
Mark, you're an ex-ETF builder and you used to work for the biggest ETF builders in the world, BlackRock. How important is the ETF to the cryptocurrency ecosystem?
Well, I think from the standpoint of mass retail acceptance, it's very important. When you think of an ETF, it's basically a container that allows you to put in different underlying assets that may be difficult for your average retail investor to get exposure to. A good example is fixed income. Usually fixed income is traded in normally large notional values, and an ETF allows a retail investor to get exposure on a much smaller size.
So Mark, is this the thing that opens up the institutional war chest and gets the money flowing into crypto?
I don't think this is what opens up the institutional investment to it. I think there's more systematic pieces to the ecosystem that need to be put in place, such as custody, before true institutional investors will really participate.
Mark, the question we've asked everyone, do you think we'll get a Bitcoin ETF before the end of 2018?
Very unlikely.
Why do you say it's unlikely that we'll get an ETF before the end of the year?
I don't really foresee any Bitcoin market being regulated by the year end. And the fragmentation of liquidity means that you're unlikely to see one market have a large dominance over the overall trading volume of Bitcoin.
Mark, if you look at the comments by Commissioner Hester Peirce from the SEC, where she clearly says that the SEC has overstepped their authority, do you think there's infighting in the SEC about this ETF?
Well, clearly there's some dissent, and she wrote a very nice piece outlining her opinion. But I think more broadly speaking, when you talk about ETFs, you talk about ecosystem, and I mentioned before lack of qualified custodian in the ecosystem. And I think until there's a regulated exchange with proper governance, there's a variety of custodial solutions. You're not going to see an ETF approved by them.
The big question that I've asked all the other guests, and I'm not going to let you off the hook, do you think that we're going to have a Bitcoin ETF before the end of 2018?
Before the end of 2018, it doesn't seem likely. However, it is a possibility for the first quarter of 2019.
Okay, now why do you say that an ETF is unlikely in 2018?
So according to an attorney that I was speaking with on Twitter, he said that basically the SEC has several periods that they can actually delay. There's actually 3 different periods that they can put on a specific delay. He did the math, which I had retweeted, which basically put the timetable for the final decision date at around March 4th, day after my birthday.
So you're talking about the current ETF, the Van Eck ETF, and you're saying that even if this one is approved, it's more realistically going to be approved sometime next year?
Yeah, they're not in a rush to approve this one, so most likely they're going to take their time, and then which would mean that on August 10th will be a simple delay of judgment.
Matti, do you think that we've ticked all the boxes when it comes to the approval of an ETF, specifically after the Winklevoss one got declined?
I believe that by the time we get to quarter 1 of 2019, the market will be much more mature. As we discussed previously, there's a lot of OTC desks that are coming online. Specifically, the Van Eck ETF is aimed at institutional investors. The minimum contract size being 25 Bitcoins is not a small amount. At today's prices, that's about $200,000 per contract. So the fact that they're looking specifically at institutional investors should bring the regulators around just a bit. And the fact that these ETFs are 100% insured is a very comforting thought for any financial regulator.
So you think that this one does have a chance despite the fact that the Winklevoss one got declined?
Yes, the Winklevoss ETF was specifically aimed at retail investors who the SEC feels is their specific job to protect. However, institutional investors are they're much bigger players. The SEC sees them as, a big boy. They can make their own decisions. They've got their own team of analysts. They've got enough money, enough assets under management under their belt that they can really do their own homework, and the SEC feels less obliged to step in and protect them.
Matti, how important is an ETF to the development of an ecosystem? People are making out like it's the be-all and end-all, like it's the biggest event in the history of Bitcoin.
I remember in March of last year, there was the first Winklevoss ETF that was on the line, and the market got all excited. It rallied into the decision, and then it was squashed, and the market went down for a few hours before the sentiment turned around, and over the next few months it had rallied hundreds of percentage points. So yes, it could be a good thing in that it'll bring fresh money into the market. New liquidity into the market is a very good thing and very healthy for the ecosystem. I don't think that it's the most important thing in the world.
Matti, if the ETF is approved, what happens to the Bitcoin price?
Most likely it'll go up. There shouldn't be any negative factors from the approval of an ETF. It just means that there's new money coming in. It wouldn't hurt the market in any way, shape, or form.
Matti, care to put your name on a number?
You know my number, Ran. It's between $100 to $1 million by the end of the year. And I say that with a 99% certainty.
After the break, we've got the SEC commissioner who's been good to Bitcoin.
You are a trading master. You see trading opportunities where others see coincidences. Charts and patterns are everywhere. You can run with the bulls or be at one with the bears. So, don't waste another pip and take your talents to eToro. See why so many top traders choose us as their main trading platform. Start trading on eToro today.
It's been a big week for Bitcoin at the SEC, and there seems to be a new name in town, Hester Peirce. Who is Hester Peirce?
I'm a regulator at the SEC, which is the U.S. Securities and Exchange Commission, and I come to this position. I've only been here for 6 months, but I worked here before as a staff attorney, and now I'm back as a commissioner, and I'm delighted to have the opportunity to weigh in on these debates on cryptocurrency and on other things. I think we have an important role to play in telling the United States and the world that our capital markets are open to innovation, and that's sort of what drove my dissent last week and what really drove me to come back to the agency as a commissioner.
Now, Hester, let's look at the process. There was an ETF that was filed by the Winklevoss brothers or their company Gemini. Were you consulted here?
So what typically happens is that these decisions are made on the first instance by the staff as opposed to the commissioners. And so that's what happened here, that it was a staff level decision and that it eventually got essentially appealed up to us as the commission. And so a lot of this happened before I got to the agency. There was process before I got here. And then once I got here, we were confronted with the application being actually brought to us to consider as a commission, and that's when I was able to weigh in.
How many people are on the commission?
There are 5 of us. Although now there are only 4. So the decision was made 3-1. But typically when we're at full strength, we have 5.
Okay, now do you need a majority vote?
So it is a majority vote. In this case, you had what the majority was doing in this case is saying that they were essentially replacing the staff analysis and decision with their own. But the staff had turned down the application.
So the staff turned down an application and passed it on to the commission, which consists of 4 people, and obviously 3 of the 4 people said no.
Correct.
Okay, let's talk about why this application in particular was turned down.
So it's easier for me to talk about my reasons than it is theirs, but I think if you read their order, which is relatively long, they go through an analysis and say that the rule change, which is how this is done, an exchange comes in and they say, we have a rule change that we would like to put into place, which would allow us to trade this product. And so the majority of the commission said that the proposed change was actually not consistent with the governing statute. In this case, that's the Securities Exchange Act. I take the position that actually the change that was before us was consistent with the Exchange Act. There's no reason for us not to allow this product to go ahead and trade on the exchange. So I would have let it go forward, whereas my colleagues believed that it should not go forward. Now, they cite a number of reasons for that decision. And specifically in this case, what I think they did is they looked through to the underlying asset. In this case, that would be Bitcoin. And they raised some concerns about the market for that underlying product. I think by doing that, they went beyond what the statute allows us to do. And we should have really focused on the market where the exchange-traded product would trade, as opposed to focusing on the underlying Bitcoin markets. I think if you did even decide you want to focus on the Bitcoin markets, I still would have come to a different conclusion than they did.
So their concern, or at least one of their concerns, is that there may be price manipulation in Bitcoin, the underlying asset. And what you're saying is that the SEC has no jurisdiction to look at the underlying asset. Is that correct?
That's correct. I think, you could consider other underlying assets like gold or oil, those types of underlying assets. Also, it's not within our purview to go and look at how those markets are actually working. We should be focused on the market that's trading the security, which in this case would be the exchange traded product.
Now, you published a public dissent voicing your opinion here. Is that normal in your line of work?
Oh, absolutely. I think one of the reasons we have a 5-member commission is that we all bring different perspectives to the table, and we all bring different experiences and different priorities. And so I think it's not unusual for one or more of us to dissent. It is a little bit unusual in this type of decision. However, given that, again, that we're a 5-member commission, it's not unusual for people to come to different conclusions.
So what happens now? You've published this dissent. You've highlighted that the SEC should not look at the underlying asset, but only focus on the actual instrument. Do they take this dissent to heart when considering the next application?
Well, I certainly hope so. I mean, I hope that by putting out what I believe to be a reasoned analysis of the approach that we should take, that my colleagues will take it into consideration and that it will help them as we think through the next one of these. So that's the hope. We're always trying to influence one another's thinking. That's part of what we do as a commission.
Okay, now speaking of the next application, there is another ETF application filed by Van Eck. Will you be on the commission for this one?
So the commission doesn't change. Now, again, these are first handled at the staff level, and then later might come to the commission level. So I don't want to speak about any particular product that's under review right now. But, just again, as a general principle, I think that we should be looking for ways to increase opportunities for investors, which this last decision that we made did not do. So I'm hoping that in the future we'll be more willing to increase the potential opportunities for investors to participate in these markets in a way that is consistent with their preferences and consistent with a way that would be effective and efficient for them.
Now, Hester, forgive me, this may sound like a strange question, but are you a hodler of Bitcoin?
It's not a strange question. It's a great question, and I'm not. I think that in the role that I'm in, it would be potentially difficult for me to be objective if I did have Bitcoin or any other cryptocurrencies. So I don't. But as I say, I'm a big fan of innovation, and I think that there's a lot of interesting momentum in this space to solve problems that have been around for a long time, and people have been looking for solutions. And I'm hopeful that we're going to see some solutions to some of these long-standing problems coming from this space, from cryptocurrency, digital assets generally, and blockchain. So I'm just a big fan of innovation, but I'm not a holder of any of these cryptocurrencies.
Hester, are the other commissioners as passionate about innovations, or are they, well, kind of like we imagine the SEC, stuck in their old ways?
Well, look, I think any regulatory agency has a difficult time dealing with innovation. And I think if we look critically at ourselves as an agency, we've not dealt well with innovation in the past. And we have a lot of work to do to get ourselves to a place where we're more welcoming to innovation. And that's natural in many ways, because as a regulator, it's easier for me just to say no or not yet, because no one will ever know the cost of that lost opportunity. On the other hand, if I say yes, let's open the doors and let these innovations happen in our space, I can tell you if something goes wrong, someone's going to come back to me and say, you as a regulator should have stopped it, and you didn't, and so its investor losses are then on your head. So it's just much easier to say no. And so I think we need to change our cultural expectations too about what a regulator's role is. The SEC historically has been about disclosure. So it's about getting information out there to investors so they can make their own choices. They can decide what they want to hold and what they don't want to hold, what they want to avoid and what they want to invest in. But if we then put the expectation on regulators to basically be a quality check.
Hester, as a regulator, do you feel a sense of responsibility for innovation? On the one hand, you have to protect investors. On the other hand, you have to protect innovation and have to protect industry. Do you carry this weight on your shoulders?
Yeah, I do feel a weight on my shoulders, and it's less about the competitive advantage than the fact that innovation is really beneficial to investors, but it's also beneficial to the economy as a whole, which means it affects real people's lives. It makes real people's lives better. And so I do feel that weight of not wanting people in this country and people across the world to lose out from, as resources are being poured into this area. I want to make sure that we as a nation are a place that people feel, yes, we can come here, we can innovate, we don't have to worry about a regulatory structure that's going to unnecessarily inhibit us. Of course, we want to have investor protection in place, but if we have a system that's unwelcoming to innovation, it will go elsewhere or not happen, and that will hurt real people. And so I do worry about that.
Hester, last question before I let you go. Do you think that we'll have a Bitcoin ETF by the end of 2018?
I really can't speculate on that. I think, we'll see how well I'm able to convince my colleagues that we can move forward. But we obviously will consider each application on its own facts and circumstances. And so we will see what happens.
Don't you wish all regulators were more like her? Next up, things get salty in the crypto lending sector. Salt lending, once the darling child of the crypto lending space, has hit salty times, or at least that's according to several media reports. Several reports claim that their CEO, quote, made a scammy and speedy exit. And to make matters worse, the company went quiet on its community, dragging its token price down from a high of $14 to just under $1 today. Now Nexo, one of the newer players in this space, a company that did an ICO that was 11 times oversubscribed, claimed that they sent an offer letter to bail out the troubled salt lending. CNBC has managed to get a copy of that letter, which is titled Acquisition of Remaining Qualifying Assets, with a focus inter alia on loan receivables, provision of liquidity, and support to the community and borrowers. Kalen Metodib is the head of corporate finance at Nexo, and I've got him on the line. Kalen, let's start off with the news that we got last week, that Nexo had given Salt Lending an offer to buy all its assets. Is that correct?
First of all, Ran, thanks for having us on your show. We follow it quite regularly. And thanks for asking this question, because I think that it is going to disprove a lot of mystical atmosphere that's been created since the end of last week. Actually, the information is partially correct. We only sent an official inquiry and a letter of intent to SALT to acquire the so-called qualifying assets. In other words, assets which would be in line with our lending criteria in case that they're interested to arrange additional security for their operations. The reason why we did this is quite obvious. There has been some buzzing communication in the internet that there might be some kind of a disorder at SALT at this time, and obviously we're not here to make allegations or comment on these allegations. We came in with our pure intention to help. We hear that there are some changes taking place at the company. There hasn't been any regular communication to the community. The community members are even coming to us and are asking for liquidity. So we thought that we would approach the company, see if we can help at this case. Obviously, the entire industry is in an infant stage still, and we believe that we should be assisting each other, helping our competitors, because the industry is large enough. There are opportunities for everybody. And I think that it is for everybody's benefit to be working hand in hand at this early stage in our development.
Now, you talk about helping a community, but you're also helping your own balance sheet. You're looking at a competitor that may be in salty times, and you're seeing an opportunity to capitalize on their lending base.
I don't think that it is prudent and proper to look at this in an extreme way. As you know quite well, in the real world, let's say in the world of finance and banking, banks provide liquidity to each other all the time. There is the intra-bank market, obviously, where overnight deposits are a large part of the industry itself. In this particular case, we didn't say that we want to acquire the company. I think this is important for us to make this distinction. We didn't say that we're coming to raid their customer base. All we said was that we have liquidity at this time. We're interested to lend more of it, of course, in line with our lending criteria and our KYC and AML standards, which we will not compromise. So, if we can give them a helping hand at this point and provide some liquidity to them and also to their community, it is something that we are interested to explore. At this particular time, we're still waiting to receive the official response.
Have you guys had an official response from Salt Lending?
We have not received the response yet. The only thing we received is obviously an automated response from their system that our ticket has been received, and we expect to receive this answer hopefully today or tomorrow.
What makes you think that Salt Lending does have liquidity problems today?
It doesn't. It doesn't make us believe that. All we did was just inquire whether this was the case. We offer something, and obviously it is the fiduciary duty of the management of Salt to respond to us whether this is the case and whether they're interested in our offer. Obviously, in this situation, there are two answers. Either they can say, yes, we're willing to work with you and accept to explore this opportunity, or they can respond that they're not interested, and this would still be an official response.
Now, under the assumption that they actually consider your offer, what are you proposing exactly? Are you proposing to buy the assets? And if so, what happens to the token holders?
Our proposal was that we offer liquidity to the company and to the community, and it goes both ways. We can either refinance some loans which are currently on the books of Salt in accordance, as I said, with the due diligence process which we will perform, or we can provide direct liquidity to some new members of the Salt community, which currently we hear, and we don't know, of course, if this is the case, but we hear that the company hasn't been able to provide continuous liquidity to its membership base over the course of the last several weeks to a few months. So what we're doing is we're offering liquidity on both fronts. And as I said, it is a very basic and straightforward offer for us to sit down with them, talk, explore what we can acquire, where we can provide this liquidity, and move forward in a constructive fashion.
So there's some clarity from Nexo. I've got Bill Sinclair on the line, and he's the CTO and acting CEO of Salt Lending. Bill, to an outsider, it looks like things have broken down at Salt Lending. Once you guys were the blue-eyed boy of the crypto lending sector. What's going on?
Well, so I think, we've determined as a company that we had to make some changes in order to grow the company significantly. We had, our existing founders. They were very much part of kicking the company off and creating its origination. But we've learned, as an organization that the company needs a different skill set in order to grow. And I think that was always sort of in the minds of the founders. It's just something that probably was never communicated publicly because it's really more along the lines of, the way that any business has to grow and mature over time.
Now, Bill, the rumors in the market are that the CEO made a scammy and surprise exit. How true is that?
So he didn't have a surprise exit per se. I've seen every rumor on earth. The board of directors, had reached out to me and said, look, we need to take this company in a growth direction rather than sort of an origination or founding direction. You've got a lot more experience in product development, technology, fintech, etc. We'd really appreciate it if you could, help us in an interim way. And I was, humbled and honored to do so.
Was there any element of surprise, or was it a long time coming?
I wasn't in the discussions that maybe preceded it per se, so I can't comment on those. But I think from the life cycle of any business, I would imagine it would have been a long time coming to constantly look at your senior management team and make sure that it's right sized and right skilled.
Bill, you mentioned that they asked you to lead the company. Now, if that is indeed the case, why are you referred to as the interim CEO? Are they going to hire a new CEO?
So from my perspective, I will serve in this role for as long as the board of directors needs and wants me to do so, and I can continue to add value to the company. They haven't made any determination yet as to bringing in an outside CEO or keeping me in this place for the foreseeable future. We're really more focused on our near-term growth objectives and not on sourcing a new chief executive.
Now, Bill, is the business running? Is Salt lending?
We absolutely are. So since our platform launch in December of 2017, we've issued more than $50 million in US dollar loans. We have over 70,000 users on the platform. We're well capitalized, and we're actively issuing loans in 3 countries today and getting ready to announce new jurisdictions.
Now, Bill, there's been an influx of competitors in the space. You've got Celsius, you've got Nexo, you've got a whole lot of others. Are you finding that the space is becoming overtraded?
I don't know if I would use the word overtraded. I think we certainly expected to always have competitors. It would be a little bit unnerving, I would imagine, if we didn't have competitors. I think competitors always validate your business. So to me, I think it's to be expected in an industry like this that's very new.
Bill, when the CEO left, got fired, was asked to leave, did he take anyone else with him? Did anyone else leave?
So we haven't had any other arrangements with any other senior members of the team since Sean's departure.
And how many people work at Salt today?
We're just under 100 employees in 3 different countries.
Now, Bill, we heard earlier that Nexo, one of your competitors, had given an offer to buy the assets of Salt Lending. Have you received this offer?
So we've never received an executed, signed offer by them or any other company for that matter.
Have you received an unsigned offer? They were on our show a few moments ago and they claim that they've got a support ticket number.
So to me, it's really commenting on marketing strategies of another organization. In the course of my business experience, I've never received an offer in a public fashion. So it's something that we haven't even considered a legitimate business offer.
Okay, under the assumption that they do deliver an offer to help and to buy your assets, is that something you'd consider?
Yeah, certainly not. I mean, it's again, we don't have any M&A activity discussion in the company today of any of our corporate entities, and I don't anticipate anything like that in the near term.
Okay, so are you telling our viewers that all is good at Salt and at this stage there's nothing to worry about?
Absolutely. Our borrowers' collateral is secure. Our employees are growing and happy and doing fantastic work here. And, all is well with the business, and we look forward to continuing to grow our jurisdictions and our loan portfolio.
We heard some criticism that Salt had gone very quiet when it comes to communicating with the community. Is this true? And if it's true, what caused the silence?
Sure. I think, as any company grows, we had different people filling different positions. I think we were very active in the early days because we had sort of less internal operations going on. As we've continued to scale the team, we've scaled the team, specifically in the marketing area that's going to allow us to address these concerns going forward. And we hope to do a better job talking to the community. We recognize internally that it's something that we've failed at.
My next guest is something of a success story. He started out in his college dorm with $10,000, and today he's managing a fund of over $16 million. And he's out to prove that you can make money even in a bear market. Stefan, how can you make money in a bear market?
That's a very good question. Thanks, Ran. So long story short is the cryptocurrency market is incredibly immature right now. And this immaturity leads to a lot of inefficiencies across the fragmented landscape of exchanges, right? So when you've tried to log on to, these different exchanges, you probably noticed there are so many options to choose from. Each one of them has different prices, right? Which boggles the mind because it should be the same price across all the different exchanges if it's the same currency, right? However, using arbitrage, what that means is you can buy in one exchange that sells Bitcoin at a lower price than another exchange, right? Without actually having to take a bet on the price of Bitcoin itself, right? And this is what we call cryptocurrency arbitrage.
Okay, does that mean that you have to have accounts at all the exchanges and then you have to have money in all these accounts in all the exchanges, and essentially then you've got exposure to exchange risk?
Yes, that's correct. So one of the real innovations behind arbitrage is being able to access all these fragmented different entities or different exchanges where you can trade over, right? And take advantage of these opportunities in price differences.
Don't imagine you've got people watching screens looking for arbitrage. How does the system actually work?
Yeah, it's a good question. So we actually run a proprietary software platform called Tenjin, which actually scans over all the different cryptocurrency exchanges that we're connected to and makes an automatic trade once a price difference is spotted between any two exchanges, right? And it does this once every 30 seconds. So as you can imagine, we do a lot of trading every day.
Roughly how many trades do you do a day?
anywhere from 5,000 trades to 70,000 trades a day.
Okay, and tell me, what are you guys actually trading? Are you trading only Bitcoin versus US dollar?
Yeah, it's a good question. So currently we trade over 6 different countries. And whenever we find a price difference between 2 different currencies, 2 different fiat currencies, that is, we can make a trade in any of the top 4 cryptocurrencies, right? So usually what this looks like is if there's a difference of price between Canadian dollars and US dollars for Bitcoin, we might buy Bitcoin in the US exchange using US dollars and sell it in the Canadian exchange for Canadian dollars, and then convert it back to Bitcoin, US dollars for a premium. And then we make money that way.
Now, Stefan, you mentioned that you sell Bitcoin on the one exchange and you buy Bitcoin on the other exchange. Does that mean that you are always holding crypto and that you actually do have exposure to crypto?
Yes. So the interesting thing about this is that during certain times, you do have to hold cryptocurrencies, right? Because, for example, when you're transferring between different exchanges or when you between the different countries, right? You might be exposed to some Bitcoin risk, right? So there are some interesting ways you can hedge against that risk, for example. But the main thing here is that unlike a buy and hold fund, as long as you enter the position and sell it immediately, so if you buy Bitcoin and sell it immediately, essentially, you're not exposed to any directional risk.
Okay, let's get to the numbers. What were your returns last year?
Last year, we made 500% after fees.
So that's 500% risk-free.
Interesting that you say that. So it might be market risk-free because you're not exposed to the ups and downs of the Bitcoin market. However, what you're doing with arbitrage is trading market risk, counterparty risk, right? Because what happens is if an exchange gets hacked or, we send some money but it doesn't arrive, then we've effectively lost that money, right? So long story short, you might not be taking like a bet on the direction of Bitcoin, but you're still taking a bet on the stability or the robustness of these exchanges that you're trading on.
Okay, and how are you doing this year?
This year, we're up 66%. So we're quite happy with that, actually.
Now, there's a huge difference between 500% and 66%. Why is there such a big gap?
So last year, there are a few reasons. And one of them is because the arbitrage opportunity is decreasing. The second is also because we've become a lot more risk tolerant, basically. So we're taking much more proactive risk control measures so that we're not taking bets on the different exchanges. Last year, we were only trading over 7 different exchanges. This year, we were trading over 40 different exchanges. So we've diversified a lot, minimizing counterparty risk. But at the same time, when you increase such complexity, you minimize returns a little bit because the cash flow becomes a lot more complex, right? But alongside that, arbitrage is decreasing in the space. And the main reason behind that is a lot of competition coming in, a lot of institutional cash flow, things like that. And the market itself is simply becoming more efficient.
It seems like today all the hype is around this new concept called transaction mining. Transaction mining is actually a new type of exchange where as people trade, their transaction fees are paid back to them through mined coins. These holders then receive dividends based on the trading fees earned by the exchange. So for example, if I buy $1 million worth of Bitcoin and I'm supposed to pay $10,000 in fees, I receive $10,000 worth of these mined tokens. As a token holder, even if I don't trade again, I receive a dividend which is derived from the revenue earned by that exchange. With me on the line, I have Aries Wang, who's the founder of Bbox, the 9th biggest exchange in the world, and he has recently started a transaction mining exchange called CoinPark. Aries, can you remind our viewers what the concept of transaction mining is all about?
I think the trading on CoinPark is considered as mining, and the user is considered as a miner. And the mining output is CP, which is the exchange token from CoinPark. And you only need to trade on CoinPark and get the resulting transaction fees will be automatically converted to CP. And those CPs will be treated as dividends paid to your CoinPark account.
So if I understand this correctly, all I have to do to mine new coins is to trade on CoinPark. And if I trade, then I get my transaction fees back in CP tokens.
Yes, correct.
Okay, now you're paying a dividend. What is the dividend paid to CP holders?
The very beginning policy is 100% of these transaction fees paid as dividends. And we just changed it by today. The 80% of the bonus, the transaction fee will be paid in dividends, and that 20% is going to be the operation expense.
So you're saying that by applying transaction mining, you're making the users the owners of the exchange, as in they share in the profit share of the exchange?
That's true, yes. Like for each transaction, and we will record it, and we will take an hourly screenshot to make sure that you get hourly paid regarding to the transaction fee that you paid.
Aries, you are the founder of one of the biggest exchanges in the world. Is there a risk that if exchange mining or transaction mining takes off, it could destroy your entire existing business?
I don't think that is a necessary relationship between these two, because I think once you are established, you are still need to keep innovation. That is how the business, especially for those Fortune 500 companies globally, they are doing a lot of innovations. They have an innovation department to keep merge and to keep acquire those top innovative companies globally. And we definitely on this track. We want to do the same thing, because we don't want to say we are already top 10, we achieved the milestone, and we will always be in there. I think this is not the truth. So we are keep exploring and trying to find a mutual benefits way. On the one hand, the traders, the projects will be benefited from the new policies of a new exchange. On the other hand, the exchange also going to be benefited from the new policy.
But Aries, if the volume increases on CoinPark, can it not cannibalize the volume on BBOX?
I think that is not correct, because in the future, I think BBOX is a big support of the CoinPark. And the CoinPark is something very new, and everybody trying to know what is CoinPark at the current stage. And people already know BBOX. BBOX is safe, it's secure, it has most convenience API, supports a lot of institutional traders, a lot of retail traders, and people love that. And CoinPark, in the future, we definitely aim to be the #1 trading platform globally, and we have a lot of ambitions.
Let me know on Twitter whether you believe transaction mining is a sustainable model. My next guest is no stranger in this space, and he thinks that we haven't seen the bottom just yet. Willie Woo joins us all the way from Lisbon. Willie, so good to have you back on our show. You say that we haven't seen the bottom of the cycle.
I don't think so. No, I seriously, I think we've got a lot of bullish sentiment happening in the market. Certainly it's risen very quickly, but I think this is the third dead cat bounce. I think that we're doing this final kind of bump, then we're going to come back down, and then we're going to stabilize and fully detox from this this mania phase we had on the tail end of last year. And that'll take time. We've seen that before. We've seen this in 2014, 2015. So, and I've got a lot of data that's saying we are far from the end of the detox. So I think that we're capping out around now. It might go a little bit higher, but mid 8,000s is about where I think we'll sort of balance out for a few weeks, which we've been doing for the last few days. And then I think we're going to come back down, test some bottoms, and maybe go a little bit lower.
Now, Willie, when you say test some bottoms, the last bottom we saw was around 5,700 on Bitcoin. Are you saying that we're going to go lower?
I think we're going to test that bottom, and we're going to find out if it wants to move any lower. And if it does move any lower, then the next level, which is pretty strong as support, is in the 4,000s. I don't think that's going to give way. I think that's a very solid bottom. And it's actually time is the thing I'm looking at. Well, we haven't finished. We've got more time to burn. All the indicators are showing we need more time to reach the bottom signal.
Now, when you talk about all the indicators, what specific indicators are you looking at?
Okay, for this one, because there's a lot of indicators here with what traders use, and they're kind of tactical, day-to-day, strategic trader games. But what I'm trying to do is look at long-term fundamental movements. So I use one that is called NVT. It's one that I kind of made up. And NVT is actually looking at real stuff, like the transactional value that is going through the blockchain, and correlating to how the market cap or network value, which is derived off the exchange price, and how they compare. And there's a 9-year history of that being very, very highly correlated. And wherever it's out of bounds, it always comes back to its norms. And we're out of bounds now, and it takes some time for that to come back.
Now, Willie, I'm looking at the chart you sent us. What are we looking at here?
Yeah, it's really a long-term price. It goes way back into 2017. It looks at the early price rise into that mania phase, where we had that little double top signaling the very top, and then the price fluctuation since then. And on the right-hand side of that chart, you'll see a lot of bars. And what those bars represent, what we call volume profile. Volume profile is essentially how much coins or whatever you're trading was traded at that price, right? And so this represents what's happening in the market when traders said, that's a fair price, I'm going to trade volumes, lots of volume of it. And so you see these bands appear where a lot of volume traded hands, and they tend to be areas where the price doesn't slice through.
How long can we expect this crypto winter to go on for?
I'm of the opinion that is the tail end of this year where we will start to see the sideways, very strong sideways movement. And so we've got a few months to burn, and that's, a few months to burn before we start to see the start of that accumulation phase that I'm expecting. So yeah, fourth quarter at the earliest.
So that's it, another jam-packed show. The next time I'll see you will be from Hyderabad in India, where I'll be covering the Indian blockchain scene. Until next week, we will be much closer to an ETF decision. I'll be getting bashed on Twitter, and you should trade well, my friends.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.